The cryptocurrency billionaire Sam Bankman-Fried lost the majority of his wealth, saw his billion-dollar firm go bankrupt, and basically plunged straight from the top down to the bottom. This is a piece of very shocking news because the event was so huge. Where did it possibly go wrong? This does not involve only just FTX. Another crypto trading platform called Alameda Research was involved with this issue as well. In this video, you will further learn all the details about the collapse of FTX and why it came to be, so stay tuned. Please consider liking and subscribing, especially if you like this type of content. We always appreciate any kind of support. Welcome to EM3 Financial Freedom Strategies, where you learn how to manage your time and money to achieve financial freedom. If you want to know all the juicy details, then make sure to watch until the very end. Before moving straight to the news, just to put everyone on the same page, especially those who are relatively new to crypto, let us briefly discuss what FTX is all about and what it does. Then we'll go straight to the news from there. FTX, also known as futures trading, surged in July 2021 and had more than 1 million members, and became one of the biggest cryptocurrency exchange platforms by volume. Mr. Sam Bankman-Fried, also called SBF on famous social media sites, served as its CEO. It was formed in 2019 and headquartered in the Bahamas. FTX allows individuals to trade digital assets for fiat currency and vice versa. In simpler terms, if you know Binance, FTX is just like it. Furthermore, FTX has invested millions of dollars in pushing American lawmakers to enact cryptocurrency-friendly regulations. It should be known, though, that before FTX, there was a crypto trading company called Alameda Research, which was established in October 2017 by Bankman-Fried and his other colleagues in Hong Kong. Mr. Bankman-Fried started his first business through Alameda Research. Alameda's primary way of earning was very simple. It acquired Bitcoin and other crypto coins in one region of the world, traded them in another, and kept the excess. This means that they buy cheap somewhere around the world and sell the coin at a higher price in another region. Alameda experienced trouble looking for investors to fund their operations because lots of banks were hesitant to accept cryptocurrencies as a legitimate form of payment for loans. Initially, he thought that he could attract traders through his connections with other well-known personalities in the crypto industry. But then, he got a brilliant idea to raise up FTX to support Alameda. Basically, he created FTX in part to support Alameda's trading operations. With FTX comes along its coin called FTT, which became largely held by Alameda. Alameda started utilizing its FTT holdings as security for new loans to help with trading. With the infusion of capital from investors, Mr. Bankman-Fried launched a massive marketing effort for FTX, negotiating branding agreements with sports leagues, running television ads, and engaging celebrities to promote the platform and attract retail investors. Time passed until CoinDesk released a report regarding the leaked balance sheet from Alameda Research. According to the report, the majority of the assets Alameda holds are FTX tokens, specifically FTT. Of course, this did cause alarm from the people considered. To calm the masses, the CEO Caroline Ellison posted on her Twitter regarding this piece of news and said that there is more than $10 billion worth of assets not shown in the leaked balance sheet. She further reassured the people by telling them that the situation is really under control and that the platform is safe. The majority of the traders using the platform did not believe this statement and therefore kept withdrawing their money. This further escalated when Binance liquidated its FTT tokens. The storm further developed, especially when everyone became aware of FTX's acts, which considerably alarmed investors. Because Alameda had invested more than $2 billion in cryptocurrency startups earlier this year, several of Alameda's lenders wanted their money back due to the alarming amount invested. This year, when the cryptocurrency market started to falter, a series of high-profile losses from businesses with which FTX had tight relationships set off a chain of reaction of issues as well. More lenders requested their money back as cryptocurrency values dropped. The value of FTT, which Alameda had pledged as collateral for certain loans, was likewise diminished by the declining prices. FTX eventually turned to use money that clients had put with the exchange for the convenience of trading to pay Alameda's lenders back as the company struggled to make ends meet. As crypto values started to fall these recent months, the way these two companies were set up meant that problems in one company can heavily affect the other. In the end, it brought down both FTX and Alameda, costing clients and traders billions of dollars in losses. The bankruptcy of FTX was caused by FTT experiencing a liquidity problem that led to its collapse. On November 11, 2022, FTX, which was previously valued to be as high as $32 billion, filed for bankruptcy in Delaware and left more than 1 million creditors in the negative. It has been discovered that U.S. authorities launched an investigation into FTX months before the company declared bankruptcy, suspecting the defunct cryptocurrency exchange and its troubled leader, Sam Bankman-Fried, of committing federal fraud. The investigation was led by the U.S. Attorney's Office for the Southern District of New York, and investigators monitored the digital trade for months. The U.S. Attorney Damian Williams from New York remarked, quote-unquote, "I think it's fair to say that by anyone's life, this is one of the biggest financial frauds in American history." This sums up the action done by Mr. Bankman-Fried, the person who invested the money from customers for his own profit, paid off debts and covered up company costs, and used it for Alameda research, among other things. Hopefully, this video has made it clear what happened with FTX and what caused it to go bankrupt. The downfall of the once proud cryptocurrency giant and its subsequent demise truly rocked the world. Now that we know the full extent of the situation and how it unfolded, we hope that the industry can learn from past mistakes to prevent another financial catastrophe like this from happening ever again. Although the past cannot be changed, we hope it can serve as a warning to others in this crypto industry to tread carefully so that they do not end up suffering the same fate as FTX did. As frequently mentioned, when dealing with your investments, it's best to be rigorous with your background check. Seeing this issue blow up, those who have funds left, they might be able to manage, but we all know that there are many people who won't be able to get back on track due to the losses incurred. Everyone is advised to be as diligent as possible when it comes to their trading decisions and overall finances because crypto is really volatile and is pretty much unregulated. As always, we in EM3 wish you the best of luck. Please like and subscribe to see more of our content. Feel free to share your thoughts and ideas in the comments down below. If you liked our content, then please check out our other videos. Thank you for watching and see you in the next video.